He said, well, like, here's the question. Do you know the difference between currency and money? Currency loses value over an extended period of time. Money gains value over an extended period of time.
Hello, Stephen Esser here for Think Smart Education, and today I'm joined by two amazing men, Daryl and Brian, the co-founders of As Good as Gold Australia, based in the Great White Shark capital of Australia. Now, they know two things about what gets people's hearts racing: gold and sharks. And right now there's a feeding frenzy with investors piling into gold as prices keep rising. So let's take a dive in before the big players take the whole catch. Welcome, guys.
Great to be here.
Thank you, Steve.
Awesome. Guys, for years I've heard gold experts talk about gold going to $5,000, $10,000, even higher. It never happened, and it's starting to rise now. Why hasn't it happened up until now?
Well, it's a process, of course. But yes, I mean, there are many people who talk huge numbers, but you've got to listen to the educated people. Charlie Tremendous Jones, wonderful motivational speaker, an American, and he had many things to say, but I remember him saying specifically, in 5 years' time, you'll be in exactly the same position as you're in right now, apart from two things: people you meet and the books you read. And I made it, I put in an effort, along with Brian, to meet as many qualified people as we could, people we could trust. And it was a gentleman by the name of Peter Daniels that I connected with 40 years ago. My purpose, making contact on that occasion, was to ask him to speak at an event where I had about 100 men, women attending, and the whole object was to further their education on economics and increase their income potential. And so here I am sitting in front of him. He'd agreed to speak for me, but he said, before we part company, Daryl, what I'd like to do is ask you one question. Do you know the difference between currency and money? I sat there and I had no idea what he was talking about. And so I guessed. I said, I think they're both the same. And I've got a multi-millionaire, bordering on billionaire status then, looking at me and saying, Daryl, wrong answer. He put his hand in his pocket and he said, Daryl, this is currency. It was an American dollar that he pulled out and waved in front of me. He said, this is currency. Now, I knew that, but then he said, this currency has lost approximately 85% of its value when measured against real money gold. This is from 1971 until then, approximately 85% loss against real money gold. So he said, Daryl, keep this in mind and never forget it. Currency loses value over an extended period of time. Money gains value over an extended period of time. So here is my question, Daryl. Knowing that, what would you say then? Currency or money? And I said, with a stutter in my voice, money. He said, good answer, Daryl. And so I feel as though you need to listen to educated people, smart people. In fact, I know you do. And when I was speaking to Graham Daniels, it's Peter Daniels' son, just recently, we'd had an hour-and-a-half conversation on precious metals. And I said at the end of the conversation, it was quite in-depth, and I said at the end of the conversation, so Graham, where's gold going in 2025? And he said, Daryl, you know the answer to that. It will continue to go up, as it always does, because governments will continue to overprint and debase their currency. And all gold will do is account for the mismanagement of governments and fiat currency. Now, Graham Daniels got it right. Peter Daniels got it right. Gold will continue to increase in value, and it will intensify as governments around the world continue to promise more to gain votes and to gain an ascendancy and continue to debase currency. On just finishing on that subject, will it go up 50%? Will it go up 100%? Will it go up 500%? I think we're going to see some amazing things happen. But putting a value on gold is almost impossible to do. And I'll share this with you. I'm now holding a $100 trillion Zimbabwean legal tender note. It was worth $1.20 in 2008 when this was printed. So would you exchange this, or would, for an ounce of gold? Of course not. But it says it's $100 trillion. But does that represent true value? No, because you can print this to oblivion and it becomes worthless. So it's pretty hard. It's impossible to put a value on. One day you may be able to exchange this for a home. I don't know. But you could in 1923 during the Weimar Republic. So putting a value on it, can't do it. But we do know it's going to continue to accelerate at a rapid rate, as it is right now as we speak. Gold was up 40% last year in Aussie dollars, and we believe this year it will intensify.
I love the education, Daryl. I think, people have to do their own education, get their own knowledge. Otherwise, they panic decisions. And certainly, we advocate for people getting educated. Do your own research and make your decisions. But in terms of what's going on with gold, with all the headlines that are going on right now, obviously the Trump administration has brought it to the forefront with saying they want to go and see if the gold is in Fort Knox. Is the gold in Fort Knox? And then just tell us a little bit about that, and then just the pricing of gold in those vaults that they're saying it's $40 an ounce, and they might revalue it at $3,000 an ounce, or it's just under $3,000, which it is right now. What's going to happen if they do that? And do you think the gold is even there?
It only needs one man. This time it's really Donald Trump. Last time it was President de Gaulle. 1965, President de Gaulle sent a warship to the United States of America because every ounce of gold, every $35 US was back with an ounce of gold. And President de Gaulle had a lot of American dollars, but he thought that the American government or the Fed had overprinted. So he wanted to exchange his American dollars for gold. Sent a warship to the United States and did the exchange. The problem then was that many other countries decided to do exactly the same thing. And America, and in particular President Nixon, knew that they had overprinted and they would run out of gold. And if the rest of the world knew that, it would be the end of the US dollar. So they introduced the petrodollar, of course, which forced countries to purchase oil in US dollars, hence petrodollar. And it gave the American dollar ascendancy from that point onwards until now. Because now you've got BRICS nations that have come forward and not trusting the US dollar. And they're buying up lots of gold. All of the central banks in the Eastern Bloc countries are buying up gold. Now, Donald Trump has come in, of course, and one's not quite sure what's going through his mind, but he's different. Absolutely. He's not a magician, but he is different, and he's calling them out. Yeah, the last audit, I believe, and there are variants to this, but 1953-54, that was the last audit on Fort Knox. So President Trump has said, let's audit it. Let's see if it's there. I've spoken to, Brian, we've spoken to many experts, people we have enormous trust for or trust in, and none of them believe that the gold's there. Or certainly, we don't believe the US has got 8,100 ton. Now, we're not even sure what that means, but we do know this, that there's a lot of countries at the moment, a lot of financial institutions, a lot of banks that are demanding their gold, whereas normally they take out a contract And at the end of the term of that contract, they would either reassess their position and keep that contract in place, or they would take the cash in exchange for the contract. And what they're saying now is, no, we want the gold. And so there's this phenomenal demand on the COMEX Commodities Exchange in the US for these entities to get their gold. Now, we don't believe it's there. This would create chaos globally. Absolutely. And the price of gold would go to unprecedented highs. It would be unimaginable.
It'd be a run on gold, which would
Huge.
Yeah.
Yep.
This could be like a unprecedented event, and one of the things that everyday people who aren't as educated as you guys, obviously you live and breathe it. You've got a company. I think we talked last time. It was like the third biggest company in Australia, and heading towards being the biggest. And thank you, because you're one of the few that actually are willing to go out and educate people. You're not just about, obviously you got a great product, great service, but you actually educate people and talk to people about that. And that's really important. So one of the challenges, I've had and many other people have is that when we see the value of an asset go, to the level, to its new high, it's usually where we want to buy, right? And so because it's easy, it's exciting, we get caught up in the excitement of it. Now, fortunately, I listened to you a few years ago, and I got in 2021, and before that, we were making small acquisitions of it as well, my wife and I, because I heard a report saying that if you have around 10% of your net worth in gold, it's a good hedge. I don't know what that means, but it sounded good, so that's what I basically did. So what someone who's looking on the sideline now and waiting, like many people do for property, people wait till the value, goes down. And for the last 10 years, if you waited, you couldn't save the deposit. The rate of growth would have outgrown you. What's something that you've seen smart investors do as opposed to the average investor that buys with emotion? How should people be looking at this right now? And with this price, and how should they be looking to get in? Is it like any tips or advice?
Look, I would suggest, Steve, that people get in as soon as they possibly can. I agree with you that so many, whether it be real estate, whether it be gold, they hesitate and wait to see if it's going to drop back a little more, consolidate. We'll watch it a little bit longer. And yet so many of those people have come to me, to Brian and myself over the years, and said, and we wished we hadn't done it. We wished we'd got in earlier. Because they look at it and say, well, 3 years ago, it's up 100%, or it's up 80 or 100% in that time frame. We should have got in earlier. Rest assured, see, what we need to appreciate is this. And I did mention briefly before, gold accommodates for the absolute mismanagement of fiat currency. That isn't going to improve. Governments, until Donald Trump came along, how many smart business people were in politics in the United States of America? He is a businessman. At least he knows how to make money, so he should be able to manage a country to some degree, even though it's a huge job. But he is not a magician. The US debt is bordering on $37 trillion, and every time a new president takes the helm, over 2 terms, that debt increases by about 8 trillion, doesn't it? 8 to 10 trillion.
It doubles.
Doubles.
This double. In round figures, it'll double.
Okay.
Yeah.
So it's doubling now. So that will continue. That's not going to change. So gold will continue to go up in value. I mean, we look back to 71, 1980, during that period. In 1971, gold was $35 an ounce, and it went to $800 an ounce. 1980. Silver was $1.20 and went to $50. So gold went up 2,400%. Silver went up 3,600%. When you lay a graph one over the other, that is now over 1971 through 1980, we're at about 1974 right now in this bull run. We are going to see a repeat of 71.80. Of that, there is absolutely no doubt. Nothing can change the course of history there. It's just going to, there isn't another outcome. So, and Donald Trump can't do a lot about that. So, just expect gold to go for another 7 or 8 years. It'll just continue on its charge. So the logical assumption from that is buy it now. The sooner you get in, the better. And what tends to happen when people start, and I think the most important thing, Brian, is I've always said this, start. Make a start. When I started, after I'd had that conversation with Peter Daniels and I bought some silver and I bought some gold, I then started to educate myself and I listened to Peter and I got smarter and smarter and I realized that this was just going to be an ongoing process. And here we are. Gee whiz, I look back in 2000 gold, the year 2000 gold was $400 now. So I've just kept buying it. And today we're at 4,600. So, it's up 1,100% in 24 years. I don't know of anything else. I do not know of another investment that can match that. And all you need, now there are some that could some people who could question me on that. However, when one considers all of the costs incurred in many of those other investments, what do you need with gold? Feather duster. Feather duster is your investment to maintain it.
Yeah.
That's it. Right.
What about Bitcoin? Bitcoin has grown more.
It has. And I've said, and I've said to people, because I get asked the question all the time about Bitcoin, how do you rate Bitcoin? And I said, I'm not sure. And the reason I'm not sure, I'm happy to see Bitcoin out there. I really am. I have a little bit of it myself, just so that I can have some fun with it. However, it's had 15, 16 years of history. That's not enough. We're having a look at Bitcoin right now, and it really it's done nothing for the last month. Now, I'm not sure why that is, not sure. But I can't go back and say, look, 20 years ago it did this. We had a recession in 1971, and we had a lack of confidence, 71.80. This is what Bitcoin did then, and we maybe you could compare notes now. We can't do that, because it doesn't have the history. It's got 15, 16 years. How much are we going to learn in that period of time? Whereas with gold and silver, you're talking 5,000 years of monetary history. We can go back to 71.80. We can go back to the GFC. We can go back and see what happened to these other great empires. Why are they no longer with us? We've got history that we can make judgments from that, and they can be remarkably handy when you're talking about investing a considerable sum of cash into any area of your portfolio. So I'm just not convinced yet. I might be if I would be if it had 100 years, 200 years of history behind it, but that isn't the case. And unfortunately, as much as I'd like to be, Brian, I don't think I'm going to be here to be able to determine that.
We can do many things, but it can't extend much past 100 years.
No, that's it. But
Yeah. And what about silver? Silver, I heard, when I first started studying gold and silver, listening to, audios and reading books, they said that silver should be 1/10 of the gold price. And it was always lagging, and I'd say, well, how come it's not going up? Because I bought all these beautiful Kookaburra coins, and I remember one time a client signed up at a seminar for one of our coaching programs, and they said someone came to me and said, "Oh, they want to pay with silver." It's like I told them no, and I said, "Get out of the way! Where are they?" And there was these beautiful 1 kilo kookaburra minted coins, and they were absolutely beautiful. And I didn't put them in the check bag, in the check luggage. I took them through the X-ray machine, and when they went through the machine, the guy was like, "Tit, tit, 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 tit. What the hell is this?" And people behind me, all these coins everywhere. And so, loved silver. And for some reason, people who are getting started, it's like, they look for the cheaper investment. It's the same with crypto. Like when Bitcoin is $100,000, it seems scary. When gold is like 3,000 or heading towards 3,000 and it's at the top of its highest it's ever been, people are scared. Is silver a good start for someone who's getting started today? Is it gold? Is it a bit of both? Like what would you tell your kids if you were teaching them today?
Well, I know what Brian tells his kids, so I love the question, but at the same time, I know that Brian would love to answer this. So, chat away.
At least I get a voice.
That's why, Brian. That's why I don't have my wife here anymore, because she never gets a word in.
She gets a word in. I can answer this one basically the same way as Daryl would answer, but if you understand silver for the last 50 years, it's probably been more of an industrial metal than a monetary metal, right? Everybody that knows about monetary systems, they talk about gold. So let's have a look at silver. It actually, in the Earth's crust, it's around about 15 parts silver to 1 part gold. It has been that way for thousands of years, right? But right now, they've dug all the easy silver out, and it's presently in if you have a check out mining companies, it's about 8.5 to 1, not 15, 8.5 to 1. So you would think it would be 8.5 times the price of gold, or gold divided by 8.5, but it's not. It's 90 to 1. So there's a lot of big difference between 8.5 and 90, right? But because it's a industrial metal, right, the price is able to be controlled. Well, why do they control the price of silver? Because it was a monetary metal, and a bit like gold, unfortunately, in the past, and only in the last 50 years, have we had governments seek out ways in which to control the price so people don't see silver and gold as money. So silver, incredibly enough, it is being talked about a lot more now because, yes, it is more affordable, absolutely more affordable. But it is more volatile because it has been able to control the price I'm talking about. But one of the people that we talk to very regularly, he's an English economist, and his name is Alistair MacLeod. He would have to be probably number 1 or 2 in the world to speak about monetary systems and obviously gold and silver. Now, for the last 8 years, the world market has been selling more silver than what's been dug out of the ground. Now, you'll see over the next 2 years, silver take off like a rocket. It has to do it because gold's getting very expensive, right? And there's only a certain amount of people can afford gold, but everybody can afford silver. An ounce silver coin's $50, $60, something like that. Everybody can afford that. And it's going to take off. There is no doubt in my mind it will take off. That is in the next 2 years. I am totally also convinced that within 5 years, we will have a gold standard in the world, right? There is no other way in which the monetary system can go, because it can't keep on going with deficit spending. The monetary systems in the world will go back to a gold standard, and that may incorporate Bitcoin. I do not know. But I know it will incorporate gold. And when gold is sold and silver is sold at 8.5 to 1, because that's what's coming out of the ground, you watch the price of silver. I'm talking into the well past $100, well past $200, somewhere around the $500 mark in about 5 years, but certainly over $100 to $120 in the next 1 to 2 years. And that's what I call a reasonably good investment, although, as Daryl said, I hate to use the word investment. We'll talk about that later.
Yeah, absolutely. The thing... Sorry, Daryl.
No, I was just going to say that it's interesting, though. There is a better time to buy silver if you consider a couple of factors here, the point I was going to raise was that there have been six occasions since 1971 where silver had a ratio to gold of 80-1 or more, 6 times. Now, on every single one of those occasions, that ratio has closed in to 35-40-1 every single time. Now, we're out to 90, as Brian mentioned just then, 90-1. It will close in to 35-40-1, which means it's going to outperform gold by double. So it would make an enormous amount of sense, and Brian and I are pretty much 50-50 gold, silver, but it would make enormous sense to have a portfolio 50-50, and as silver continues to escalate at a faster rate than gold, and it gets to somewhere around 35-40-1, sell it, liquidate it, and buy gold. And you've actually bought your gold at half price at that point. So we see this happening. History tells us it will happen again. And absolutely, silver is totally undervalued at the moment. So
Yeah.
perfect time to buy it.
And the other way of saying that is that you're using your silver, which has gone up at double the pace, to buy the gold with. So you never see a discounted gold price. Never. It's not like selling carpets or socks and shoes, as you would say. You never see a discounted price of gold. The only way to buy it at a discount is buy the silver, wait till it goes up in price by double, then revert back to gold again.
Gotcha. It's interesting you say that, because I watch a lot of crypto guys and they do a similar thing. They trade on all altcoins and then they put it all back into the Bitcoin. So it's a similar sort of mentality there. I think that's fantastic. And in terms of the silver, one of the things that I sort of struggled with in understanding the buying process, and even gold to a degree, but more silver. You know, when we're buying silver and we're buying it as an investment for the long term, which I think like that's kind of like how I've always looked at it long term. You know, if you're looking to trade, then it's probably something, you know, go and do it on the stock market. But what's the deal with silver coins, and then you've got silver bars, and you know, like there's this premium and that they talk about, and it's like, hang on, I thought silver was $30 and I'm paying you $50, like, because that's a minted coin. And can you explain and educate our people a little bit about that?
Yeah, look, I'll add a comment to that. When you buy a silver coin, it's generally a 1 ounce coin, and we have 1 ounce, half ounce, 1/10 ounce. But the majority of that cost after the spot price. I mean, the spot price of silver today is $50 to $51. The coin is $60. If you buy in volume, it might be $59 or $58.50, something like that. But there's a large manufacturing cost in that silver. So that's got to be added to the cost once of the raw material being $50 an ounce. So to get, let's say, compare a 1 ounce silver coin to a kilo of silver. When you buy a kilo of silver, 1 kilo, you're pouring molten metal silver into a pattern, right? And 1 kilo comes out. They polish it up a bit, clean it up a bit. But if you want some silver to the value of 1 kilo, you have to purchase 32, because there's 32 ounces into a kilo. So you have to purchase 32 1 ounce. So look at the work involved: pouring, manufacturing, pressing, cleaning, doing all the other things before you actually see the physical metal. So my question is, and statement is, it's great to have some silver coins. I mean, I have approximately 2,000 of them, but over a period of 12 years. I have some half ounce and some very small amount of 1/10 ounce. I've got that because if the whole world collapses, you've got something to use as a trade, right? But you're not going to go out there with 1 kilo of silver, which is $1,750 today, to buy a loaf of bread, right? So my coins are there to trade, right? But I own more I own more kilo bars of silver than I do coins.
Mhm.
So that's where what most people would call the investment. It's not an investment. We'll talk about that later as well. But the bottom line is you only have a minimum coinage, right? The maximum silver that you should be buying today, 1 kilo bars, half kilo bars. Leave the coins to, a specialty. Don't have any more than probably 500, something like that.
And why is it that you guys don't call it an investment?
Okay. This will be the brief answer, but it takes a little while to actually get it, to be educated on it. But let's have a look at currency, as Darryl said, currency versus money. An investment today, whether it be real estate, stocks and shares, bonds, investment in cars, it is all done with what we call fiat currency. Now, fiat currency, fiat is a Latin word out of nowhere. So that currency comes from out of nowhere. It's no different from having a piece of newspaper and you color it with a bit of ink and you put 100 on it and it's called $100, or the edict from the government is $100. But all those investments are based on credit, money that you actually obtain from a bank, whether it be a central bank or private bank. It is all printed out of nowhere. It's paper money. So what you've got is credit. There's a difference between money and credit. Money has the 5,000 years of history, as Darryl was saying. Credit has only had 100 years, since 1913. 1913 is the year when the Federal Reserve, as a central bank, came up and said, look, we'd love the people to have credit now. We'd love the people to have these dollar notes rather than taking around gold coins with them. They pulled this great idea about pocket full of coins. No, it doesn't work that way at all. I can tell you right now that you can buy a brand new motor car of $50,000 with 12 coins. That doesn't fill up a pocket, right? But that's another story. The thing is, we have credit, right? And credit can be seen, and this is where privacy comes in. Credit can be seen from every camera, from every computer, from every screen that the government uses, that bank uses now. You could say there's nothing wrong with that. I would say I put a little bit of pressure on the privacy aspect. I don't want everybody knowing what I'm worth. I don't know. I don't want to have banks knowing what I've got in this account, that account, and everything else. I like a bit of privacy. So to answer the real question is, we are dealing with credit, not money. And credit, as you can see, and a very good example is this buying a Ford motor car, right? A Ford motor. Let's go back to a Model T Ford, right? And back in those days of 1908 with Henry Ford, you could buy a Model T Ford for $360, but because it was on the gold standard, you could buy 18 ounces would buy that Model T. Now today, using credit, right, because they print so much of it, that Ford will cost you $50,000, not $360. But in gold, it doesn't cost 18 ounces; it costs 13 ounces. That's how valuable gold is over a long period of time. So that's what we say: save in gold, save in silver. Do not save in credit, because you'll lose it. Overall, you'll lose it because the inflation rate is far higher. Again, they're lying, government. The inflation is much higher than what they say it is. And if you're banking these currency notes, you are losing through inflation.
So for someone, getting started with you guys, As Good as Gold, they're new to the market, how can they start their gold and silver investment journey with you guys?
Yeah. Okay, well, you continue. You're doing well.
Okay. So it really depends on the amount of currency, and I'll call it money because most people know it as money, right? How much money they want to buy silver and gold. Okay, I have to ask the question to them, and we sort out if they've got $5,000. I would suggest they buy $500 worth of coins, right? I suggest they buy some silver up to the value of about 50% of the 5,000, and the other $2,500, I suggest they buy half ounce or 1 ounce gold bars. Right now, so that's a person who's got 5 or 10,000 to buy. If they have a self-managed super fund, which everybody, by the way, can have, as long as they have $100,000 in a super fund, right? They can convert it to self-managed, so they can buy precious metals with that. But even private money, if they have 50,000 to 100,000, I would suggest you divide that by 50% to silver and gold. And gold would be some 1 ounce gold bars, some half ounce gold bars, right? And I'd leave it at that. In the silver, it would be 1 kilo silver bars, maybe a few half kilos, and as I said, a few silver coins. But the majority of silver should be in half kilos and kilos, and the majority of gold should be half ounces and ounces. I'll give you a tip, and this is one thing I've learned over a number of years. Daryl and I do not own 1 kilo bars of gold. Right? They're lovely to look at. They really are beautiful. And you hold one in your hand and say, oh, I've got $150,000 here. But it doesn't do you any good for your later when you want to maybe transfer. You might want to buy a block of land. You might want to buy a home. You might want to buy a car, whatever. The reason being is that 150,000 block of gold is great, but you would be far better off having 32 1 ounce bars or 64 half ounce bars, because nobody has got the crystal ball of how high gold's going to go. And I can tell you right now, we are at the low end of the stick. So it is my opinion that you should be owning no bigger bars of gold outside of 1 ounce for that reason, because you don't know when the higher price is going to be. And if you've got 1 kilo of gold at 150 and you sell it, I'll guarantee you it'll probably be worth $200,000 for that bar of gold around about 12 months later. But if you've got 64 half ounces or 32 1 ounces, you've got all the options available to you to be able to sell 1 or 2, 3 or 4 at different times of the price range.
Yeah, I think back to 1971, once again through to 1980, and just working on Brian's presentation there, it just makes so much sense. Just imagine you had 2 1 kilo bars of gold in 1971. 1973, gold's doubled. You're tempted to sell at least one of those kilos of gold. So you do that, you're happy, you doubled your money, shall we say, or your currency. Then 73 through to 75, it doubles again, and you sell off your second kilo. You're a very happy person. But from 75 through to 1980, gold went up 2,000%, and you missed the ride because you've already sold off. And so you may, and Brian mentioned, a kilo of gold looks fantastic, and you'd save 2% on your purchase price in preference to buying 1 ounce gold bars. 1 ounce gold bar, you pay 3% over spot. Kilo of gold, 1% over spot. So it's 2% you've saved, and you look at this thing and it looks glorious. However, you would have made an extra 1,000% because it went up 2,000% over that last 5 years. You would have made another 1,000% selling off in smaller increments. It just gives you so many more options, so much flexibility to purchase the smaller denomination. Not to go to 1 gram because you're paying a lot of money for that, and there's no real advantage in that. So agree 100% with what Brian said, and our portfolios are made up 95% of it. In my case, 1 ounce gold bars, kilo silver bars, and that would be my recommendation.
Great.
For the viewers, by the way, Steve, is that spot price of gold and silver refers to the mining price or what the miners get for their ounces of gold or ounces of silver, right? So they dig it out of the ground, they melt it, they get purity, right? That's what the spot price is, whatever it costs to get that gold or silver out of the ground. So when you have a look at that, go to our website and you'll see the spot price, and you also see the retail price. There's always a little bit more of the retail. But that covers manufacture, insurance, transport, and a little bit of tiny little commission for us. All right. And I'll tell you, we don't mind telling people this. We make less than 1% commission on gold. In fact, it's a little bit less than 1%. So it's only because we sell a lot. Right.
Yeah.
Bottom line is that the spot price only refers to what the miners get for their gold and silver coming out of the ground.
Beautiful. Now let's talk about selling. All right, because now we've bought the gold, we've bought the silver. Let's say somebody's wanting to keep it as around 10% of their total net worth, and they've want to sell some down. What's the process of selling? Because the buying part is the easy part. Well, not too easy, but easy once you've made the decision. But once you've got it, it's the same with crypto. I see that people buy and it more than doubles and they don't sell out some of the position to get their money back. What's the process with reselling it? What's the options?
Well, it's pretty straightforward, isn't it, Brian? I mean, it's selling your gold back. I mean, we receive a phone call. And that could be international because we've got a lot of international and a lot of interstate clients. But many of them, of course, vault with us. It's easier if we're vaulting your product because then it is just a phone call. Hey, Daryl. Hey, Brian. I'd like to sell off an ounce of gold or 10 ounces of gold. It doesn't really matter. But if we're holding their product in our vault, then it's an easy transaction for us to make. So what we do is transfer. We agree upon a price based on spot at the time. So it's spot price at that moment. They agree to liquidate. So we send, if it's a first-time customer, when they're liquidating, we'll send $1 to their nominated bank account. And once that dollar is received, they notify us of that, which generally wouldn't be any more than an hour. And at that point, we transfer the balance. So they've got the cash in their account generally within 2 or 3 hours of putting forward the application.
Great. So if I'm selling back to, like, if you've got it at your vault and I'm selling it, it's easy because you don't have to retest it because you've held it the whole time. What happens if I've taken possession of the gold and silver? Then I want to resell it back to you or just to another company.
Yeah, Melbourne office, Adelaide office.
Yeah, we've got a Melbourne office as well, of course, but and as well as the Adelaide office. But yeah, you've got to get it back to us. That's really what it amounts to. Or you would have to get it back to another bullion dealership. But we would always test it. We have an analyzer which will confirm the authenticity of that product. So it'll break down the components within that gold bar. And unless it's 99.9, we wouldn't buy it back because we only buy bullion grade metal. So we would test it on an analyzer. It takes about 2 minutes, but it provides a remarkably accurate report. And at that, we would, and if it was a cash transaction, we would take the gold and hand over the cash in exchange.
Gotcha. Awesome. And if that cash transaction is over, like $10,000 or whatever, is that something where you've got to fill in some forms for the government? And is that still the number, $10,000, like where people, if they sell an asset for that price?
It is a number. So generally what would happen, Steve, is that if let's say somebody had $50,000 worth of gold and they wanted to sell it back, then they would probably come in with their partner, and it might take a couple of days. It would be $9,999, or as close as you could get to that $10,000 limit. And with two people, obviously, it's twice as fast. But yeah, it might take a couple of days to get the transaction totally completed.
Gotcha. Gotcha. So, in terms of selling, it's better to sell back to a dealer as opposed to, putting it on eBay or Craigslist and having someone that you don't know come around to your house.
Well, like, I mean, apart from anything else, you know that it's going to be a fair deal. I mean, I've heard some horrible stories, I really have, but we buy back generally at spot. We know of many bullion dealerships that sell, that they don't make reference to this when they sell you the gold, but their buyback policy just isn't listed at all. And so very often buyback could be spot less 5%. We'll buy back at spot less 1, never any less than that. So we're 4 or 5% better than most other options out there. And 5% on $1,000 is $50. And if somebody sells back $100,000, it's $5,000. That's the difference.
Yeah.
So, find somebody reputable, because a lot of people don't know what a fair buyback is. But my strong suggestion now is I would never suggest that anyone ever sells back if you're getting less than spotless 5%.
Yeah.
Find someone who will offer spotless 1, spotless 2, something like that.
That's fantastic. Yeah, because no one ever talks about that. And let's be realistic. People need to sell sometimes. There's family emergencies. There's whatever the case, and usually they're in a hurry. So this is a really good bit of education you guys have just shared there. What about buying from, like, I go, whenever I try to value the coins and stuff, I go to eBay and places like that. What's some of the things people should be careful of if they're going to try and go and buy online, not from a dealership like yourself?
Well, I don't know why anybody would not purchase from. Most people do. Most people purchase from a bullion dealership because they're investing a considerable amount of cash. So they want to know, they want to be guaranteed they're getting what they expect, and that is a 1 ounce gold coin, a 5 ounce gold bar. They want to know that it's 99.9 plus. My strong recommendation is that, and most of the purchases are done through bullion dealerships or mints. Would you agree with that?
Well, exactly. So they come into our bullion shop, and not only do they get personal service with one particular person, and you don't come and deal with a person over the counter. You actually come into our office and you sit down with us. But we have certain things like an analyzer, which is about a $40,000 piece of equipment. Any good, strong bullion dealer has one. eBay or anything like that would not have one.
No.
And so this analyzer will test exactly the purity of the metal that the person is coming along. Now, obviously, if it's got AG written on it for as good as gold, we know where it's come from, but we still analyze it. And we have a weighing machine that measures up to 0.01 of a gram. So the weights are there. The quality's there. So they get instant money back if they want cash. If it's a large one, they get it overnight in the direct transfer. So, I think that.
Well, I think it's it's trust, isn't it? At the end of the day, I mean, we have thousands of clients, and they trust us, and they have every reason to. So, as you develop that trust over a number of years, well, generally they're going to come back to us. It would only be if they were interstate, it was complicated at the time, they couldn't get it back to us, and they might go to another bullion dealership, but that would probably be it.
Yeah, gotcha. And then with regards to the storage, so people have made the purchase, they've got really, 3 choices, is it? They can take it home, or somewhere, they can store it with your company, or they can, do what's the other option? Put in a safety deposit box, their own safety deposit box. Like what's the best option?
Yeah. Well, like it depends upon hey, I mean, some people feel very uncomfortable holding gold at home. It's different to anything else that you may. You're using the word invest.
Careful.
But if you buy a new home, the natural tendency is to invite everybody around, welcome them, a housewarming type thing, and come and we've got a tennis court, we've got a swimming pool, come and join us, and everyone's happy. When you buy gold, most people don't talk about it a lot. So, but we do have a lot of clients who have a safe at home. Make sure it's a good one. I wouldn't go to Bunnings and purchase anything from them. I'd find, once again, a very reputable, and we will recommend companies that you can go to purchase a high quality safe that's impregnable, it's heavy, so it's impossible to lift, to remove. And so that is one course of action. If you vault it with us, I mean, it's not expensive to vault. It really isn't. You can purchase a small depository box or lease a depository box for, say, $150 a year. You can put $1 million worth of gold into it. That's $150 a year. So not expensive. And if you want to liquidate at any point of time, it's the easiest thing in the world to do. We've transferred the funds into your account in just a couple of hours. It does really make a lot of sense. So, I think it's about 70% of our clients vault with us, and they can come and visit the vault anytime they like. Just make an appointment, come down, open up the depository box or the safe, if in fact we're holding a lot of metal for them, and they can come down and count it anytime they like. So it's they're certainly your best two options. The hole in the ground, I've found I know of a few people, Steve, that have done that. And then finding the hole becomes a complication. And then, of course, with rain and all of that, the gold and the silver can soak through the container that it was held in and all of that sort of thing. Just to save $100, $200, $300 a year doesn't make a lot of sense to me.
There's a funny stories there, Steve. I know a client that
some scary stories.
Stories, yeah, could have been more scary than funny. But this particular client had his early days silver and gold in he put in a tin, dug a hole 1 meter deep, so you can't find that with a detector. So anyway, he had to dig it up, and the tin wasn't there because over a period of 10 years. The tin had dissolved, and there he was picking up all these coins out there because you'll never, you can't destroy silver and gold. But so there he is picking up all these gold and silver coins 1 meter underneath the ground because the actual tin had dissolved because it rusted out, that type of thing. So we don't approve of unless you've got PVC piping and it's waterproofed and everything else. We suggest you have it in the safe.
Makes much more sense to do that, and the fact that you don't have to get it retested when you guys have held it there, and it's just a much better option. Chances of you look at the California fires. It's how many Trezor wallets, crypto computers, content and gold, silver is just it's gone. It's much safer to store it with the experts, and that's really, really good. And then the last question that I've got here for you guys is, how do people find out and reach you guys?
Well, we can give you our details before we do. I do want to share a line of thought, and I think it's important that we do this. A lot of people out there think that real estate's the ultimate investment. Everyone gets caught up in real estate. I've owned some, Brian's owned some. I'm sure you have, Steve. But I had an experience going back a few years ago, and I shuddered when I thought about it.
Yeah.
I bought a house in 1980 for $150,000. I lived in it for 28 years through to 2008. I sold that house for $560,000. Sounds great. You know, if you mention those numbers to people, they go, whoa, you've done well out of that, or you do well out of that. But I look back on it and I know this. I spent about $100,000 on that property. When I moved in, it was just sand out the front and sand out the back. I ended up building up the backyard, and I had a swimming pool in there, and it was like a barley hut, sandy beach, and fish ponds, and all that sort of thing. So I spent a fair bit of money on that. I mean, I renovated the bathrooms a couple of times. I look at the maintenance cost on that house. I look at the
Mortgage interest.
Yeah. I mean, if you look at that, if you look at the interest that you paid on your borrowings, I mean, that's just huge. Council rates, it just goes on and on and on. Stamp duty, and when you sell it, it costs you to sell it. All of that. There were enormous amount of expenses involved, and really, it only gone up about 3 times, 300%. I look at gold. And if somebody purchased a gold in the year 2000 and they looked at it now, you are talking 24, 25 years, just a little bit less than the time frame that I owned that home. And you look at it and you go, the increase, if you'd have bought it in 2000, it was $400 an ounce. Now it's 4,400 an ounce. Now it's 4,600 an ounce. That's
Australian dollars. Yeah,
100%. I mean, and as I mentioned previously on this interview, the only cost incurred in holding that metal was a feather duster operation once every couple of years, just to dust it off. And you go, how good is this? And I'll take it one step further, and I can do this, and Brian and I can do this because we've had the experience, right? So you look at it now, and if you had invested $200,000, let's say it was through an SMSF, or you sold a property, or you had an inheritance, or it was just straight out savings, but if you'd invested $200,000 into gold in the year 2000, today it would be worth, you could sell it for in excess of $2 million. Now, just think about this for a second. What it means is that you could liquidate your position from your portfolio. You could liquidate at 20% per annum, which is $400,000 a year. And gold at the moment, and for the last few years, has been going up at a greater rate than 20%. So your portfolio would be growing in the process of you liquidating at $400,000 a year. Now, most people would live relatively comfortably on $400,000 a year today, right? And see your portfolio growing. I mean, gold is undervalued as an asset. Why is that the case? Why don't more people understand this? Because governments don't want you to know about it under any circumstance. Because if you knew this, if you knew that it all came about through the debasement of currency and the mismanagement of fiat currency within government circles, you would honestly, that would be the end of the... Right now, people trust governments. That would be the end of that.
I don't think people trust governments.
But a very good friend, Egon von Graz, and he says, all politicians lie all of the time. If people only knew why gold was growing at the rate it does, and they don't even know that it is growing in value because it gets no mention. You know, you watch mainstream media, and 20 years ago, they would talk about gold. They would give the spot price of gold on the night, every night, 7 nights in a row. They don't even mention it today, because if they did, as busy as we are, there would be lines down the street waiting to get in. Because could you imagine? No one understands gold, and governments and mainstream media work beautifully together to prevent the populace at large from getting that information. And I'll just finish by saying this. This is really interesting. This is really interesting. This is the first time in my lifetime that the gold bull run that we're experiencing now has come about and has been generated not by yourself, Steve, not by me, not by Brian, not by the populace at large, but by central banks' buying powers. Central banks who created this condition in the first place and know exactly what it's leading to, know that the only way they can prepare for this is to own gold. So they buy it up at a faster rate than they ever have in recorded history, but they don't want you to know about it. And so my suggestion is, and Jim Sinclair, who was the great Jim Sinclair, of course, who owned a couple of gold mines, he'd always say this: make sure you become your own central bank. They know what they're doing. They're buying gold quicker than anybody else, faster than they ever have in recorded history. If they're doing that, why shouldn't you do the same thing? So, I hope that anyone who's viewing this now understands really what I've just said, because gold is on a ride like we have never seen before. What makes it really exciting is the fact, and keep in mind what I said, it was always the population that drove the price of gold. This time, gold has broken through all of its previous record highs without the population having any understanding of it. Now they're starting to get an understanding because it's starting to get out there. We're hearing about Donald Trump and Fort Knox and the BRICS nations all buying gold, the central banks owning gold. So people are starting to pick up on this. Can you imagine what's going to happen to the price of gold as we go from 1% of the Western world's population owning gold to 7, 8%? The price of gold will increase to levels we have never seen. It's already at a record high. It's broken its all-time high record a dozen times in the last 12 months, and it will continue to do so. So it's going to be euphoria for gold holders, I can assure you.
Brilliant, guys. Thank you so much. Again, love that education component and the willingness to want to help educate people so that they know better and know all their options. And thank you for sharing that so generously when so many other companies, all they'll do is sell it to you and not educate. So we believe in education is empowering, and most people don't learn this stuff from their families. So, we changing lives with the information and helping empower people. So thank you so much, guys, and look forward to hearing from you soon.
Thank you very much.
Thank you very much for the opportunity, Steve. Really appreciate it.